Welcome back. We still have a few seconds for the markets to open, and let's invite another banker. You know, the fundraising spree by banks is continuing. We saw a lot of public sector banks doing that. PNB and IDB have just opened their QIPs. So let's check whether the private sector banks are going to join the bandwagon. Joining us now is Mahabaleshwara, the Managing Director and CEO of Karnataka Bank. Good morning, sir. Thank you very much for joining in.
Morning.
Yeah, that is the first question. Are you also raising capital?
Hello, I didn't hear you.
Are you also raising capital?
Yeah, as far as capital is concerned, as of now, we are at a comfortable position of 13.08% capital adequacy ratio. Going forward, we have also assessed the impact of the COVID-19. So to our pleasant surprise, there will not be any negative impact going forward. So all along, I have been maintaining a CRAR varying in between 12 to 13.33%.
Okay.
So considering that position is comfortable, but at appropriate time, yes, all banks are evaluating to take a stand further strengthening the capital. So we will also take an appropriate stand going forward if it is required. And there are two types of things, Madam. One is the growth capital and the stress capital. And as per my internal assessment, I am comfortable in both ends.
Okay, got that. Well, now let me come to the asset quality questions, Mr. Mahabaleshwara. What has been the amount of money of loans that have asked for restructuring? What is the collection efficiency now?
Yeah, I had estimated about 2 to 4% of my loan book to be converted under the OTR. That is the one-time restructuring scheme. So this is on the expected line because we have to identify all those accounts by 31st of December. That exercise is going on, and I am sure that it will be within that range itself. Second one is there was a moratorium book which was at 11.56% of my total loan book as of September. That is also showing some positive traction as per our expectation. So by December end, most probably it would be in the range of around 1% only as estimated earlier. So I am not expecting a surprise stress in the loan book as far as the moratorium or as well as the OTR is concerned. But however, on day-to-day basis, we are evaluating the situation. Most probably, I think we will be on the projections, whatever that we had made as of September 20.
Okay. Mr. Mahabaleshwara, you're not looking to raise capital. Can you tell us what sort of growth are you factoring in, credit growth for the second half, and then more importantly, when we get into the new fiscal?
Yeah, see, for the current year, as I said, our strategy is to conserve, consolidate and emerge stronger. So as on the line of this principle of business, what we have been doing is we are focusing more on bottom line rather than the top line. So keeping that in mind, the credit growth should be in the range of not more than 2 to 4%. The first quarter it was less than, first half year it was less than 2%. So in the second quarter we are focusing more on the retail and the mid corporate where the traction is quite positive. So on an average for this entire year, my credit growth may not be more than 2 to 4%. So keeping that in mind, there may not be any requirement of the additional capital for the current year. So next year, yes, definitely the growth, especially in the credit, it would be in the double digit. But since our bottom line is showing the positive tractions, I think we should be able to sustain with our internal accumulation of the profit.
Okay, double-digit growth next year. Any guidance as far as margins are concerned? Because your margins had improved to the highest in the last 10 quarters. What are you expecting henceforth?
Yeah. See, again, my margin, especially net interest margin, it varied from 2.44% to 3.04%. Compared, 3.04% was as of September 2020. And by this year end, the average should be above 3%. That is what we have been striving hard since last 2 years. I think I should be able to achieve that by this March 21. So going forward, we will be able to further consolidate it.
Okay.
The comfortable margin will be ensured because all our big ticket advances stress, whatever that we had been experiencing in the past, that has been effectively resolved. And we are not taking any much exposure to the big ticket advances. Now we are focusing more on the retail and the mid corporates. Wherein for the retail also I have introduced digital sanction of loans. So this is one of the new things that is sweeping the banking industry. So we are one of the pioneers in introducing the digital sanction of the loans for the home loans, auto loans, as well as the MSME loans. As of now, around 74% of my home loans are being sanctioned in the digital platform. I have my own digital center of excellence at Bengaluru, which we have started during our transformation exercise in association with our transformation partner, Mrs. BCG.
Okay, Mr. Mahabaleshwara, can you tell us a little more about your small loans? I mean, although all bankers keep telling us that they have no COVID-related stress or very little stress, if you look at the UPI data, the amount of check bouncing is a little scary. It's about 40%. It's not going down, it's going up. What is your extent of small personal loans and how are they behaving?
Yeah, see, small personal loans are all covered under our own schematic loans. Say, for example, the home loans, I have KBL home loans category, auto loans, KBL auto loans like that. So there are different mechanisms for the recovery of the dues. One is, as you said...
But are they stressed, sir, personal loans, credit card loans? Are any of them stressed?
No, I don't have any credit card business.
Personal loans?
So there is no stress in that area. Auto loans and the home loans, there has been the moratorium. As you know, our bank was one of the banks which had given highest coverage under the moratorium. But those are the days, that is especially the March to August. From September onwards, the recovery is gaining good traction. And our own, the regional recovery hubs, they are making efforts, and as a result, the recovery is on the expected line.
No, okay. If you can tell us how much would you consider stressed? What percentage of your small retail loans and your MSME loans would you consider stressed, which can show up 6 months later, 1 year later?
Yeah, I got your point. The post-moratorium stress is far less than the pre-COVID situation. That much I can definitely tell.
Okay.
And going forward, about 1 to 2% could be the slippage ratio in the overall credit portfolio.
All right. Then we'll leave it at that. Thank you very much, Mr. Mahabaleshwara, for joining us with your with details of your bank. Okay, so 1 to 2% of the entire book could be slippages, and maybe they would come from the smaller loans. Okay, the markets have opened, and maybe let's relish the all-time highs yet again.